Welcome to Asking for a Trend. I'm Josh Lipton, still joined by ProShares' Simeon Hyman. U.S. stocks drifting lower in today's session as investors digest tariff moves and earnings. Let's get to Yahoo Finance's Jared Blickery now with the trading day takeaways. Jared.
That's right. Let's go to number one here. It's been the markets have been on the razor's edge, and what I'm looking at, and we'll put this graphic up right here so I can read the first title. There we go. Boring is good, but only sometimes. Yeah. So let's check out the price action in the S&P 500. I'm going to show you realized volatility. That's what volatility really happened versus implied. So this is a 5-day chart of the S&P 500. This goes all the way back to last Wednesday. That was that huge God candle that we got back then. S&P 500 best day, one of the best days ever. And now we've just kind of drifted off and we're meandering. I mean, the last 2 days look like virtually nothing. And volatility today, that's the trading range. All that speaks to is the trading range of the S&P 500 was 1.2%. That is the lowest since March 27th. So today, as I've been saying, has been a reprieve. I promised implied volatility as well. And so this is a look. If you look at the options market over the next 30 days in the S&P 500, all those options, you spit out a number. That number right now is 30.2. This is a 5-day chart. I'm going to show you a year-to-date so you can see where we've been. All much higher. In fact, this was 60 at the intraday high. So we've come down appreciably, but we still got some room to go here.
What about those Wall Street gurus, the strategists, Jared, that we turn to for advice and guidance about where the market's headed? What do they say?
Well, you know, Wall Street was originally a wall. It was to separate the English and the Dutch, and today we're seeing a Wall Street divided. But it's not over nationality. No, it's about the bulls and the bears. And so really interesting, we've the price targets in the S&P 500, we've just seen this incredible spread, and it's opened up so wide. The opinion between the lowest number on the S&P 500 target year end and the highest one is at the highest amount going back all the way to 2000. So there are really a lot of opinions, and this speaks as to the uncertainty. So, you know, we're just talking about volatility and that effect on uncertainty. This is a very similar situation here.
What about the dollar as well? What's the latest intel and insight from Blickery on that?
Let's talk about the dollar. The dollar, we were just talking about this yesterday, the dollar is at the lowest point in about 3 years, and I need to dial up the US dollar index. Here we go. But the dollar likes to trade in ranges, and you can see this is just a huge trading range, and we are now at the bottom end of it. And we just got the Bank of America Global Fund Manager Survey today, and we have almost a record position of people thinking, and these are the very smart money people, thinking that the dollar is going to continue going down even more. So when you have the propensity for a mean reversion in the dollar, and that's what it tends to do over time, combined with this extreme negative sentiment, that just adds to my case that we might see a higher dollar. Now, the critical question is, what does that mean for stocks?
Because would a higher dollar always be bad news for risk assets like stocks?
Yeah, well, the thing is, the dollar has actually been positively correlated with stocks going back to last September. And this was kind of surprising to me. Let's take a look. We got the US dollar versus the S&P 500, and we'll do a 1-year chart. And now the dollar is very muted, so these charts look very different, but if you just concentrate on the direction here, you can see that the dollar kind of broke away. It started going higher. The S&P 500 was already going higher, and then they both declined together. And the tariffs have really complicated the situation so that a weaker dollar is not necessarily representative of risk on. It's people leaving the dollar en masse. They want to get rid of their stocks and their bonds. These are foreigners. So if we see that reverse, if we see foreigners once again in demand for U.S. equities and bonds, I think that would be an actual good sign. So the dollar going up could be bad, could be good.
We just covered a lot of ground there.
I think so. I hope so.
Thank you, Jared.
You bet.
Appreciate it. Stick around. Much more Ask for a Trend still to come. Time now for what to watch Wednesday, April 16th. Starting off on the earnings front, some more reporting coming in tomorrow. That includes ASML, Abbott Labs, and Kinder Morgan. ASML announced results for the first quarter. Analysts expecting Q1 sales to rise by nearly 50% from a year ago for the chip equipment manufacturer. But investors will listen for any commentary about how looming chip tariffs could impact the company going forward. Taking a look at the economy, we're going to be getting some insight into the consumer with U.S. retail sales in the morning. Economists forecasting total sales to increase to 1 1.3%, and core retail sales to tick up to 0.6% on a month-over-month basis. Moving over to housing, the monthly home builder confidence index coming out in the morning. That number expected to decline to 38, which would make it 3 straight drops in a row and the lowest since December 2023. And finally, we're going to be getting some more Fed commentary tomorrow, including Fed Chair Powell, who is speaking at the Economic Club of Chicago in the afternoon. This is coming after comments from Fed President Raphael Bostic last night. Bostic emphasizing patience and for the Fed to wait for clarity on President Trump's policies before adjusting interest rates. Well, that's a wrap on today's Ask for a Trend. A big thanks to Simeon Hyman for hanging with me today. And I know, Simeon, you had one last bit of quick, actionable insight for viewers.
One last one.
Yes.
We're worried about things that can diversify equity risk. We're worried about the dollar. We're worried about commodities. Maybe precious, yes. Maybe industrial, no. Where to go? Here's an idea. Infrastructure equities, but in a very particular way. Not the companies that build the stuff. That's very cyclical. The ticker is TOLZ. It's our ProShares Infrastructure ETF. The ticker is tolls for a reason. It's the companies that own the assets, collect the tolls, real asset adjacent, very inflation resistant. So far through yesterday, year to date, not just less down than the equity markets, but very much in the green so far this year.
TOLZ. We'll take it. Thank you. Thank you, Simeon. Be sure to come back tomorrow, 4:30 p.m. Eastern, for all of the latest market move stories affecting your wallet. Have a great night.